Good afternoon. Today, the 1st of August 2022. Today, we will talk about the U.S. stock market S&P 500. Now, for that one, we can see that it's rising all the way from the 2020 all the way to 2021, no, 20, nearly 2022 January, and it started falling. And now we are puzzling whether you want to see it going up or going down. We don't know because you must have a certain measuring. And what are the tools? There's numerous tools in technical analysis, but one tool is very reliable, and that is illustrated in a book called Stocks for the Long Run by Professor Siegel. Professor Siegel. And that book that you can see here is that are interesting. In page 5, that everybody ought to be rich. And also it's talk about 200-day moving average. Okay, in the 200-day moving average, there is a very important statement here. Investor following the 200-day moving average strategy would also avoid the October 19, 1987 crash, selling out at a close to the previous Friday and so on. So, this is a reliable measuring tool to decide whether it's the bull market or bear market. Let us say, following the 200-day moving average strategy, you would have avoided dramatic days for many investors who held stocks. Moreover, investors using the 200-day moving average did avoid most of the terrible 2007 and 2009 bear market. A timing investor exited the stocks on January 2008. Okay. This means here to go back to original statement here. The conclusion of this book is that buying stocks is the way to go to prosperity, generally speaking, because by 1949, the stock portfolio from $9,000 would go to $60,000 after 30 years. Then that history proves that buying stock, the total return of the stock portfolio over 30 years was more than 8 times the accumulation in bonds and more than 9 times that in treasury bills. So everybody should buy stocks, but be careful not to fall into the great crash. And therefore, why we need some kind of timing, measuring tools, and this book, they would promote a 200-day moving average with a lot of back testing. Okay. Again, they have proof that using that kind of measuring tool, you can avoid a crash. Therefore, if you avoid a crash, then at the title of the book say, it is stocks for the long run. That means in the long run, stocks would actually give you prosperity, give you rich, make you rich. Okay, only thing that you must have the timing tool that was the spot, the market, whether it's the bear or a bull market. If that proves to be bear market, avoid the trading and get out of it. And then you will, in the long term, you will get money. And that's it for the book, and we go back to the chart. In the chart, we can select moving average, 200 days. I already describe 200 days, and it gives it there. And it's very clear now. This means that if the price falls below the 200-day moving average, you get out of the market. And on the return, you buy again. Then, mostly it's okay because you don't lose too much. And then all that you enjoy the ride all the way, and then here, there's a lot of whipsaws, isn't it? That is very painful, and you will lose some money, but not too much. And then you avoid a crash here. And now you're going up. So what you will do as the investor, as a long-term investor, you have to patiently wait until the price goes above the moving average. If it didn't, don't do anything. You can imagine that you are crocodiles swimming under the water. That you're not swimming, you are just lying there patiently without doing anything. Just patient. Whenever you get any prey that is above water, then you can jump in and then eat it. Okay. Therefore, patience is very important. Excuse me for my English, because English is not my primary language. I don't know whether the ideas will be understood by you. But what I mean is that you don't do anything too much on emotion. Now you see the price going up, you say, oh, that's the time to buy. But this is really a golden line today. If it didn't go above it, don't do anything and wait for it. Okay. So that is the advice of the book. And this book, I will give the link to this video, and if you're interested, you can buy. And now this is my version, is somewhat old, and there is an updated version for this year. And I really suggest you would buy it. Of course, I will get some little commission, but that is a kind of donation to me. I think it's acceptable. And besides this book, I would still have a lot of investment books that I will introduce in the future. For example, the random walk down the Wall Street, showing that they are really opposite to this theory. They say everything is arbitrary and there's no way to predict the market. Yes, I agree. There's no way to predict. Market is unpredictable, but at least you have certain kind of measuring tool. And I think this book is one of the classics. As I mentioned here, it's one of the best investment book of all time by the Washington Post. Okay, thank you for listening, and thank you for your help. You can buy a copy of this book in the Amazon.